Hot off the news with the Fed saying no more rate increases and possibly 2024 looking at rate reductions. This is good news, and they sounded the alarm when it comes to the stock market. Now, being in the financial industry for over 16 years, it seems like you can really follow the flow of money. When you look at investments, you can see a lot of money came out of cryptocurrencies. We've seen a lot of people pull money out of the stock market. In a rising rate environment, we really seen the comeback when it comes to savings account, high yield savings accounts. We've seen CDs, we've seen bonds, treasury yields. Were all skyrocketing and everyone was moving money right over into those. But now it seems that time has ended, which is the perfect time. Even looking at 2022, where the market was doing very poorly, that is because money was leaving the stock market. And now it seems the tide has finally turned and money is going to start flowing into the stock market. Now, if you've been following my videos for a while, we invest $1,000. That is right, $1,000 every single week on a Monday morning, guys. So I pre kind of purchase my buys. That way, when the market opens at 9:30 a.m. on Monday, the buys go ahead and execute for $1,000 every single week. Now, overall, we were borrowing on margin for the first 2 weeks. As of right now, we have been dead even for the last. So the only thing that we have borrowed on margin, and we spent $3. That is right, guys. $3 was the fee that we used to borrow on margin. I have been trying to pay this back through not only my regular job, but also my side hustle, guys. I have a gaming channel on YouTube. All of that revenue goes back into this and really building up the portfolio. That way, when we get towards retirement, we're going to be able to do it. So in today's video, we're going to be breaking down the portfolio, and I'm going to show you kind of what happens again when the market kind of makes that shift and we start seeing money coming back into the stock market, into cryptocurrency. 2024 is going to be an incredible ride. Let's go ahead and take a look at it. All right, guys, so here we are looking at the debt-free journey. Again, if you've been following this for the last, I believe, 6 weeks at this point. I think it has been 6 weeks at this point, but we have finally hit the pivotal mark. That is right, guys, the milestone of the $10,000. So all-time gain has exceeded the $10,000 mark right there. And you can see the all-time return over the last 2 years is 42.71%. Now, a lot of people and a lot of questions that I get is, how do I have such a high return? It is because of dollar cost averaging, guys. That is really the big, huge beneficial impact that I've seen with my portfolio. So we've actually, when we started the portfolio, we had about 60,000 plus in there. But overall, we bought in 2022 and we bought on a consistent basis using dollar cost averaging over an extended amount of time in 2022, which means we bought when the market was down. We bought when the market continued to decline. We bought when the market finally hit that rock bottom, and we continued to buy all the way going up into 2023, guys. We have made a lot of progression with the portfolio, yielding a very, very solid return. And you can see, guys, the overall, this is where we actually started it with what? $199 September 27th. And looking where we're at right now, guys, we are at 79,000 on December 14th, just a little bit further. So even looking, breaking down our last week. Now this, of course, you can see is a big, big increase, guys, when you kind of break it down here. So overall, starting value was 75, ending value was 78. We put our 1,122 in there. We put 1,000. The rest of it came from dividends. That's right, guys. SCHD did pay the dividends. That's where the rest of the money came in. And I believe there was also a contribution. So big shout out for the referrals, which the link is down below, guys. They have a referral program that anyone who is referred, we do get a referral bonus, and we got a $100 referral bonus as well. But you can see market gain 1903. That is right, guys. It went up almost $2,000 in the course of a week because of the Fed's news that they are no longer going to be raising interest rates. That we have kind of hit the top. You could see, guys, huge, massive market gains because of what we've seen go up there. And I believe dividends might have been the week prior, if I remember the SCHD. It could have been the week prior, not this week. But overall, guys, that is our net cash flow that is going in for the entire week. And again, going from 75.9 to essentially 78.9 is a massive, massive gain over just a week period. So breaking down the slices, guys, this is what I put my money into. Again, consulting with financial advisors, which I am not a financial advisor personally, but consulting with financial advisors, consulting with some other YouTubers that are in the financial space, financial sector. This is the portfolio that we're building. And if you remember the first videos, all the SCHD, QQQM, and the VUG were all at a zero, meaning we had nothing in there in the portfolio at all. The VOO was at 100%. So that is what I actually purchased in 2022, was the VOO, and the exclusive VOO was the only one again that we purchased. As we came into 2023, we diversified it out a little bit with the portfolio. So this is what I'm going to stick with. Now, of course, the breakdown and the logic behind it, the VOO is based on the S&P 500. So the 500 largest companies within the United States. SCHD is our dividend holder. So as the market goes up, as the market goes down, SCHD does stay pretty consistent overall. When you look at the last week, even they're up $100. But overall, this is going to be our consistent payer, and it offers a pretty high dividend yield. Now the QQQM, of course, that is the NASDAQ 100. And then we do have the Vanguard, which is going to be our growth ETF. And as you can see over the last week, guys, SCHD up 4%, QQQM up 3%, and then both of my Vanguards not up as much. But then you break it down in like a year to date. And as you can see, guys, we kind of have the rising rates here. But this is very interesting to see, because VUG, the Vanguard Growth Fund, from when I've been buying it, is up 62.19%. We have the VOO up 23, almost 24, QQQM up 14, and then of course the SCHD up another 7% for the year. And then when we go back even further, guys, you can see the VOO, because we bought it dollar cost averaging, as it went down, is up 41%, which is kind of crazy. And then 42% in the VUG. And again, 7%, 13%, guys. We are seeing real returns. Now, I know a lot of people that talk about investing and kind of go back and forth. That is the reason why I started this. I wanted to show really where we're at. And overall, the market has been doing incredibly well for the past several weeks, which for me, buying on a regular basis, I don't like to see the positive gains over time, because there has to be the market fluctuation. And I'm waiting for this to take kind of somewhat of either a nosedive or a little bit of a stagger dive. That way we can continue to buy more, and we can buy more shares at a cheaper value, getting the price in there, guys. Most people flood money into the stock market when the stock market is doing well. When the stock market is going up, that is the time, again, a lot of people put a lot of money into the stock market. I do not do it emotionally. I do it logically. I do it mathematically. I put money into the stock market if it's going up or if it's going down. If it's going down, that is a perfect time to buy, guys. When you think of retail investing, when you think of retail stores, if things are going down, they're going on sale, which means all of our ETFs are on sale. And now you'll also notice that I do not carry any individual stocks. I know some of these ETFs do overlap with their holdings, but overall, I do not hold any individual stocks. That is my choice. A lot of people like to go into the ETFs or even going into mutual funds. But me personally, this is the portfolio that we're going to stick with for the years to come. And again, not putting it into any additional single stocks. Now, overall, we've also been following this and tracking this, which is right here, guys. So this has been, again, this is our 6,000. So we have 5,000 already invested. We have 1,000 slated for tomorrow to go in there. That will put us at 6,000. And you can see the returns, guys, in the course of what, a month and a week. So looking at 5 weeks, we've went from 22 to 29, 31, 34, little bit of an increase there, then up to 42 off of the news that they are not going to be raising up the rates. Cash flows, of course, went from 65 to 69 with the money we put in there. Market gains. This is the actual gains that we have been tracking, guys. Just broke the 10,000 mark. You can see just a little bit of gain here, but over the last week with that announcement coming out, it has shot up considerably. Dividends, like I said, I believe we did get a little bit of dividends off of the SCHD, which was right there, guys. So we did yield a little bit of dividends because we don't have that much in there as of right now. Bringing our balance to the 78, almost 79,000. Once the other 1,000 goes in there, that'll take us just under 80. And you can see, guys, over the past 5 weeks, this week we gained 633, 7,600 here, 231, and then 2,000. That is right, guys. Kind of incredible to see. And where did it come from? You can see, guys, the value of the VOO went up considerably. QQQM went up about $80, which is kind of crazy. The VUG went up about 50 bucks right here. And then the SCHD, we seen a big jump. Now that is not in the price of the ETF, but that is in the value in my portfolio that we really built out here. So it's interesting to see again. I want to try to do this for a year. That is right, guys. 52 weeks gives us $52,000 invested in the market. I have cut back on just about everything frugal living. Not really spending money outside on really anything except the needs, cutting back on the wants, cutting back on all of the expenses, going out, getting drinks, getting food, packaging meals at home, making sure again that we can keep this and we can sustain this for an entire year, guys. And if we do fall a little short for whatever reason, having that margin or that leverage that we can actually borrow. And I believe the leverage account can borrow up to $32,000. So we could essentially borrow 32 weeks worth of progression in here. But again, I am trying to pay this back as aggressively as possible and seeing exactly where this portfolio is going to be in an entire year. Hopefully we're going to see some ups and downs in the next 12 months. If it continues to rise, guys, it's going to be kind of crazy to see. And again, it seems a lot of the money is flowing from financial institutions, a lot of the treasury bonds, things of that nature, back into the stock market, back into the crypto market. And we're seeing a very, very big fluctuation. All right, guys, so that is going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.